So, welcome everyone. Dawn Doherty here with my money mentor, Joel Salomon. Hello, Joel.
Hi, Dawn. Hi, everybody. Good to see
Hey.
you all.
And you all know me. I am a mindset and productivity coach for people who are their own business. So, I work with a lot of real estate professionals, service providers, and small business owners. And my whole mantra is feel good. When we feel good, when we have clarity and focus, we create the life that we desire. And my people tend to be committed to a purpose driven profession. So even if they're working in corporate now and they're not so in love with what they're doing, they have a plan for moving into a livelihood that's going to serve them in this portion of their life where they're purpose driven. Earlier in our lives, it was all about ambition, Joel. And I feel once we get to that certain period of life, it may be in your 30s, your 40s, your 50s, even your 60s, but you'll know when you turn that corner where you can't live another day sacrificing your values and giving up on your dreams, and you just make that decision to go for it. So I'm the woman to go to when you're ready to go for it. How about that tagline?
Love that.
I'm the woman to go to when you're ready to go for it. So I'm going to introduce you, Joel, to my wonderful audience here on this awesome webinar. And Joel's a master prosperity coach, and you help others overcome obstacles standing in the way of their financial freedom. So you are an award-winning speaker, workshop facilitator, and frequent television and podcast guest who's been quoted in the Wall Street Journal, Newsday, U.S. News and World Report, and you've been interviewed by Forbes, and you've been on Bloomberg Radio. You are a manager of a $700 million portfolio, and you're the creator of your own successful hedge fund. And you have two books. Love both of them. Today, we're going to look at the 9 money rules that millionaires use. And you also have a book called Mindful Money Management. So you are an expert in the field of finances, and this is why I've hired you to help me feel better about my finances and to have a more intimate relationship with my finances. Yeah. So you teach in your books, your seminars, and you teach about the true foundation of wealth and financial freedom. And it's a mindset of abundance, self-worth, gratitude, love, and service. And Joel, this is so different from how most people are out in the world talking about finance, because it's so ambition driven, rate of return, how much better did I do from the S&P 500? And you've helped me understand the deeper meaning of financial freedom, which is really being able to sleep at night knowing that my money is working for me in the way that I feel good about it working for me. So you became one of Mike Dooley's Infinite Possibility trainers in 2016. And in your heart, your dream is to help over 100,000 people to become financially free so they too could live the life of their dreams. And you're well on your way of making that dream a reality. 100,000 people, that's what I talk about. I want to work with 100,000 people so they can transform their fear into fuel, because I believe the biggest mistake that you can make around your money is not doing anything, sitting Absolutely. On the sideline. So, I'd like to just give everybody a perspective if they don't understand what's been happening in the market. So the S&P 500 last year was up 30%. And the S&P 500 is an index of 500 companies. So what that means is if you believed all, the fear mongers, all of those people in the news, those talking heads who, during Christmas of 2018, wanted you to believe that 2019 the market was going to crash, you would have given up on a 30% increase in your account. So I believe that the biggest mistake that people make in the financial markets is not being in. The second biggest mistake they do is give their money over to a manager who is only working to get their 2%, right, assets under management. Every $1 million they manage, they put $20,000 in their pocket, and they earn $20,000 a year from you, working maybe 4 hours a year, if that, by looking at your portfolio 1 hour every quarter. So I know I just spouted out a lot. How would you react to what I just shared with you?
No, you're preaching to the choir, Dawn. Actually, rule number 8 in the 9 money rules is DIY investing. So that's what I preach. Do it yourself.
DIY.
DIY.
There's a video. I'm going to just interrupt, but I'm going to have you talk some. There's a video on YouTube that you could Google this, where monkeys are choosing stocks and they're doing better than most of these, purported brokers are doing for their clients, and they're making 2%, because these people don't really understand how the markets work. All they understand is how to sell you a product that they make commissions on.
Right. Exactly. So thank you. Yeah, thank you for that plug for rule number 8 of the 9 money rules. I'm not going to be talking about rule number 8 today, but I'll let you start, Dawn. I know you have a lot to say on financial freedom.
Great. Wonderful. So as I shared, I work with purpose-driven professionals who are in business for themselves, and I center on business development and mindset. Yet, I must share that if your money mindset is off, it's super, super difficult for you to be confident and decisive. So many times with my clients, I start off with helping them get a handle on their money. So one of the things I wanted to share on my screen is some content I take my clients through, which is about refocusing on your money. What we focus on expands, right, Joel? What we focus on expands.
Yep.
So I take them through. Let me just show you the high level here, which is creating a green gap. Okay, so the green gap, and we're going to go into this quick lesson, is how much more you're making above and beyond what you need to live on, right? And once you create it, then you could follow these rules that I keep my clients accountable to. So it's first, let's look at your budget. And then we're going to identify the gap between what you would like to make and what you are currently making. We're going to talk about how to increase your earnings without getting a second job. And I'll show you how I've been doing it with my investments. And I also do some active investing, swing trading and day trading, but we're not talking about that here on the call. We want to maximize our green gap, and then we want to apportion that green gap. So if we create a green gap of, let's say, $5,000 a month, a portion of that goes to bringing down your debt, a portion of that goes to investing, and a portion of that goes to having fun. Because if we're not having fun and we're not doing the things that fill our soul, then why are we here? And I know you are aligned with me on that 100%.
Absolutely.
All right, so I want to make sure that I can share my iPad here. While I'm doing that, maybe you can talk about the importance of making investing a monthly commitment.
Yeah, before I say that, I appreciate the budgeting part, because budgeting is actually rule number 7 in the 9 money rules. Again, just for those of you who just joined, this is my bestseller that came out last September, the 9 money rules millionaires use, and we'll go over a number of those rules. But yes, it has to be a practice. You have to really get intimate with your money and your finances and your portfolio. It's not ignoring what's going on. Although I do teach some controversial stuff with some people, because if you are so fearful and worried and scared every moment of every day about your money, then you have to move your focus to some of the topics I'll talk about today. But let's assume you are in a good state to start with. Then absolutely, you should be tracking. You should have goals each month for your budget. You should have goals for your portfolio. And as Dawn said already, focusing on what you want. So you focus on what you want, you focus on your money, and you get more and more money coming to you. That's called the law of attraction.
Joel, we're all about mindset and meeting the universe halfway. And the best way to meet the universe halfway is to get clear, right? I talk about clarity and focus. So let's talk about some clarity and focus here. Here's one example that I love doing with my clients. And what we do is we create their financial houses. And I have my income house and I have my wealth house, and my income house and my wealth house. So we have earnings come in, right? And you can see my screen. Yes, Joel?
Yes.
Isn't this cool? I love doing this on my iPad here. And expenses come out. So let's look at expenses. I live in San Diego. You live in New York. Most of our clients are in these pretty high, lifestyle areas. So I love taking them through what is under this expense column. It's either your mortgage or your rent, your car. And we have spreadsheets that we take our clients to, but you must understand what all of this looks like. One of the apps that I love to share with my clients is called mint.com. And when you connect all your bank accounts, when you connect your credit score, when you have all of your credit cards there, you can see what you're actually spending on a monthly basis. And I love that. We always have the phone ringing when we're doing our webinar. You can see what you're spending on a monthly basis, and then you can cut out those expenses that are unnecessary. I identified, if you can believe this, $430 of recurring subscription expenses that most of them were things that I do use, but there was a large portion of them that I had to consider and cancel. Disney Plus, that went away because it was something that I wasn't using. So know what this is. So let's say it's $5,000 a month, very conservatively, right? We need to understand that this is net. Now, we have surprises that happen from time to time, yes? They come in the form of repairs, maybe medical. So I like bumping this up 20%. So here I'm talking about a household to just live paycheck to paycheck, must be netting $6,000, must be grossing, because we have to pay Uncle Sam, $9,000. So if we multiply $9,000 times 12 months out of the year, that's $108,000, correct? So just to live paycheck to paycheck in this scenario, which is very conservative, I need to be bringing in $108,000. So many people, Joel, are in a position where there is a gap between what they're bringing in and what's actually coming out on a monthly basis. And you've seen that, yes?
Absolutely. That's why rule number 7, you got to have, in fact, I don't know if you know this, Dawn, but the statistic is more than 80% of millionaires budget.
More than 80% of millionaires budget. I'm one of that group, okay? I budget, and Mint is an amazing tool if you're up for becoming more intimate with your money. So let's talk about creating a green gap. There are many ways to do it. You can work overtime. You can get another job. You could drive a Uber or a Lyft, or you could do what I did, which is look for ways to have my money work harder for me. And that's why I started working with Joel. So we'll talk about one little area, very high level, quickly. But let's talk about what I need to retire. Now, the word retire doesn't have the meaning that it had for my parents. Would you agree, Joel? I don't even like saying retirement account. because I can never imagine retiring because I love what I do. It energizes and inspires me. I want to do this until, my last breath. But what I get to do is choose what I want to do. So if I were in a position where my earnings went away, or maybe I wanted to take off a year, I would need a wealth account in this situation where I have at least $1 million sitting here. Because if I'm looking at a 10% rate of return as something that I'm managing to, okay. And I think my shared window closed there.
It did for some reason.
Okay. So if I was looking at that $1 million and I was looking at managing to a 10% rate of return, then I would be able to pay myself $100,000 a year. For that person who needs $108,000 to live on, they could sleep at night because they know that their money will throw off the passive income that they need to live on minimally. But there's so many opinions on how much I would need to feel like I have financial freedom. Recently, I saw an article that said most Americans believe they need 1.7 million in their wealth account. Whatever that is, we're going to discover what that is for you because it's personal. But here's what I know. When you create an additional $3,000 a month, and guys, you can do it. And if you have zero right now in your wealth account, let's just start from, somebody who has zero. In 15 years, if you are diligent about setting aside $3,000 a month, and let's say very conservatively, you see an 8% rate of return a year over a 15-year period, you see an 8% average rate of return, that $0 wealth account will become $1 million in 15 years. And you can turn up the volume on that. You can make that 5 years, 8 years, 10 years with managing two things: how much money I put aside and the rate of return that I see in my portfolio. So I'm going to hand it to you because I think your challenge, everybody on this call and those of you who are watching the recording, is to make more, earn more. And if it's not through, your 9 to 5, to find a new way to earn. And it may be working overtime, finding another job. I wanted to learn a new skill to do this. So that's why I learned how to trade options, which I do. That's why I learned how to implement a covered call strategy that allows me to collect a monthly, for lack of a better term, dividend, but it's a monthly premium that my already Coca-Cola, right? It's one of my equities in my portfolio. I love Coca-Cola. It's not going away. I believe in it. I drink Diet Coke, Joel. I'm a Diet Coke addict. But I only do one can a day these days. But I know that it's going to steadily go up. I haven't seen it go up 10% within 1 month. And what I do is I sell one covered call against 100 shares of Coca-Cola that I have. And I'm collecting, 2 to 3% on top of the money that I have tied up. And that's something that I show my clients, and it's something that you work with them in when you go deep dive. So I'm now going to hand it over to Joel, who is the expert who I've learned from, and take it away.
Thanks, Dawn. So I do want to mention on budgeting in my book, again, for those who started late, the 9 money rules millionaires use, only the unconventional ones. Rule number 7, I talk about budgeting, but I also have a really fun budget game in there that shifts your mindset from lack and scarcity to money, budgeting being fun. And it makes it all a game. And believe it or not, I've had people on my group prosperity coaching, when they start doing this game, money just kind of flows in because they're shifting their mindset. So let's talk about mindset. So today I'm going to be talking about 5 of the 9 money rules in my bestseller, 9 Money Rules Millionaires Use. So let me ask you guys a question. How many of you would like to have less money?
All right, and I have the chat. I have the chat open. You guys can click chat below. Answer. Let's see. How many? What was that question you had for
How
everyone?
many of you would like to have less money?
Who wants less money?
How many of you would like to have more money? You can raise your hand, clap in the chat. How many of you would like to know some of the 9 money rules millionaires use?
Yes,
Okay.
we see Tim raises his hand. I love it.
So, okay, so we're going to go through and write this acronym down. Big, hairy goals.
Big.
B stands for beliefs. I stands for intuition. And G stands for that financial advisor named Goldstein. Just kidding. G stands for giving. Actually, the first G stands for giving. We're doing a second G today. The H stands for be happy, and the second G stands for gratitude. So let's talk about beliefs. Do you believe that you can be rich and spiritual? Do you believe you have to work hard to be rich and successful? This is something that I was taught growing up, and I will tell you it's just a limiting belief. So, do you believe that money comes easily and frequently? Let me tell you a story. 2 guys buy Bitcoin on November 27th, 2017. The first guy, he's done all his research. He's read the white papers. He knows it's worth dramatically more. And on November 27th, he buys 1 Bitcoin at $8,000. On a scale of 1 to 10, where 10 is an absolute faith and knowing that you're going to make money, and 1 is massive doubt, there's no way in heck I'm going to ever make money in this investment, he's a 10. Second guy, same day, gets a tip from a buddy of his who says, dude, get involved. It's up 7 times this year already. It's going higher. Get involved. He's like, I don't know. It seems speculative. It seems risky. I don't know. Okay, I'll do it. He's a 1 on that scale of 1 to 10. Now, a few days later, Bitcoin's up at $10,000. And the first guy says, see, I told you I was going to make money on Bitcoin. And the second guy says, I hope it doesn't go back down. And a few days later, Bitcoin's back down at $8,000. And the first guy says, this is the best buying opportunity out there. And he buys more. The second guy, he sells. He is so grateful he didn't lose money on Bitcoin. 3 weeks later, Bitcoin's at its all-time high, $19,500. And the first guy has made over 250% on his money in 1 month.
Crazy.
And he sells. What's the point? The point is to know your belief level in each investment idea you have, either investment you already own or investment you're thinking about. And I will tell you, and this is what I tell my clients, if you're not at 8, 9, or 10, don't go there. Because if you have massive doubt, what's going to happen is you're going to be selling when you should be buying, or buying when you should be selling.
Yeah. I'll give you an example, Joel, of when you and I were speaking about Tesla, right?
Right.
So I didn't pull the trigger because of my level of disbelief. And there was an opportunity just recently where Tesla went from 700 to 900. So mindset is about confidence, and confidence breeds decisiveness, and decisiveness is required for success.
Yeah. So I'm not going to, Cindy asked the question about Bitcoin. I'm not going to go into details on Bitcoin. I can teach you all about that offline, but I want to go into all of the 5 of the 9 money rules. And I know trading options, okay, so what's your belief level? If you know that you're gonna make money on options, you know, we can definitely get into all the details on that.
Yeah.
But some people on this call will say, Joel, like, I have no idea what you're talking about. I have massive doubt. Well, and I do this all the time with my clients. If some people, financial advisors will say, okay, 80% in stocks, 20% bonds, or some percent in gold, but they have no idea what your belief level is. And if you have massive doubt that you're ever going to make money in stocks, in fact, one potential client came to me and said, Joel, stock market's risky. I'm not putting any money in the stock market. I said, well, okay, we're not going to do that because I know what's going to happen is you're going to lose money in the stock market until we change your belief that there's lucrative opportunities every day in the stock market. And I will tell you that I know tons of people who became millionaires by investing in the stock market. And if you believe that that's not the way to go, then we're not going to go there. There's real estate, there's cryptocurrencies, there's commodities, there's plenty of ways to make money. There's Amazon
Annuities, you know, people, bonds, right.
There's plenty of different types of investments to make money. But if you have massive doubt that it's stock options or it's stocks, then we're not going there. So anybody remember what B stands for?
B, beliefs.
B stands for beliefs. And that's rule number 1 in the 9 money rules. I stands for intuition. And I will tell you, as a former hedge fund manager, as Dawn mentioned, I was managing almost $700 million at Citigroup, and then I had my own fund managing other people and institutional money. If I didn't trust my intuition, I either made less money or I lost money. So my clients say to me, Joel, how do I develop my intuition? You exercise it every chance you get. You're in New York, you're on the subway platform. The local train's sitting there. The express is coming in 2 minutes. What do? Local, express, local, what do? You trust your intuition. I do this with my daughters all the time. Whenever we're on vacation, we're in a hotel, what elevator is going to come first? Make it a game. You make thousands of decisions a day, little decisions. Start with little ones. You don't have to start with that $10 million investment using your intuition, but eventually you'll get there. So here's another example. Here's a story I tell. I take my daughters to school every Thursday morning, and we have options. You know, we could take the local roads, we could take the highway, we could hitchhike. Generally, my intuition is telling me to take the highway. But there's one particular morning where the highway is all backed up with traffic. But my intuition was still telling me to take the highway. I listen to my intellect and I take the local roads. And immediately, my stomach's in knots. I get so upset because I hear the sirens, I see the flashing lights, and because I didn't trust my intuition, it cost me a $150 speeding ticket. And to this day, my daughters tease me and call me Speedy Pants. And let me give you an investment example related to intuition. It's 2008. I'm working at Citigroup, managing those hundreds of millions of dollars. And I had done my analysis with my analyst, and we had figured out that AIG, American International Group, was overvalued. We had no idea how bad things were, but we did know it was undervalued. So we shorted it, which means that we bet that it's going to go down. A couple months later, after we did that, my analyst comes to me, he says, Joel, it's going back up. Based on the analysis, it's going back up. And I agreed with him. But my intuition is screaming at me, don't touch it. It's going lower. But what did I do? I listened to my analyst, I listened to my intellect, and we get out. Now, 2 days later, AIG is down 10% in 2 days. Now, if you annualize that amount, that's 20 times your money if that continued. And my intuition, even after it goes down 10%, is saying to me, it's going lower, get back in. Not my intellect, my intuition. And I listen to my intuition. What happens? 4 months later, We make 60% on our money. That's 180% annualized by trusting my intuition. So I stands for intuition. And G stands for good looking. No, just kidding. G stands for giving. Now, giving creates karma. No financial advisor I know is going to talk about giving. But I will tell you that giving changes your mindset. Sir John Templeton, some may say the best investor of all time. He said that he hadn't met anybody who hadn't given at least 10% of their earnings each year over a 10-year period to charities who didn't have massively more wealth at the end of the 10 years than at the beginning. Now I know what you're thinking. Joel, if I give my money away, I have less money, not more money. How does that work? Well, let me explain. Money is just energy. And by putting some money out into the world, it must come back to you. And what's also going on is a change in mindset. Believe it or not, when you give even a small amount, $1, $5, your mindset says, I got plenty to spare and share. And then what happens? You do. And I will tell you, every time I've started a giving program, I recommend putting on autopilot. But even when I give to somebody in Manhattan, the money just flows back, and it doesn't flow back equally 10, 100 times. So I'm going to do something for everybody who's live and everybody who's listened to this recording right now. So get out your phones, and I'm going to give something away right now. So I want you to text to the number 66866. So get out your phones again and text to the number 66866. The first 3 words of my book, it's 9 Money Rules. Not the number, but the word 9 Money Rules, all one word. Text that to the number 66866. You'll get a request for your email. Put in your email, and exactly. 66866, 9 Money Rules, like Dawn's showing you. And it'll ask you for your email. Put in your email, and you'll get a free white paper called The 5 Mistakes New Millionaires Make. Now, you want to read this paper before you become a millionaire, because you're acting as if, which is actually a form of visualizing your dreams and desires, which is rule number 4. I'm not going to go into that today. But you're acting as if you're already a millionaire if you're not. And if you are, great. You probably want to know these rules anyway to make sure you're not making these mistakes. So wanted to give that to you guys. I also want to give something away. One more thing. I'm going to give away five of my best-selling book, The 9 Money Rules Millionaires Use, to anyone who emails me. So the first 5 people, Joel@Salomon, that's SALEURMOR.com. So I'm going to give 5 books away right now. So thank you. So let me go on to the last 2. These 2 just really, really powerful rules. So rule number 4, be happy. Well, let me tell you a story. It was July 1st, 2015. I'm on the Metro North train. I'm on the way into Manhattan on a day. I'm managing my hedge fund called Salomon Capital. And I got the news. One of the stocks that we were betting was going to go down was being acquired for a 30% premium. Meaning I was going to lose a ton of money for my investors and myself that day. And I was literally in pain, literally in tears on the train. So what did I do? I could have wallowed in this pain and this really upset, sadness, depression even. But I said, what can I do to make myself feel a little happier? So I put on a song called Ooh Child by the 5 Stair Steps. Ooh Child, things are going to get easier. Ooh Child, things are going to get better. I don't sing it, but if anybody knows the song, it's a really powerful song. Listen to it. So I put that song on as I walked to my office at 54th and 6th. And I took it off the headphones when I got to the office because I wanted my employees to hear, because they knew how bad things were going to be that day. And then I started thinking, and I had a lot of different songs on that day. I started thinking, okay, what can I do to create unconditional happiness? Because I literally was living my life on conditional happiness. If I made money for my investors, I was happy. So I looked at my profit and loss every day at the end of the day. And if I made money, I was happy. If I lost money, I was sad. Can you imagine living your life that way? And I will tell you, I'm not the best investor in the world. The best investors in the world make money 60% of the time. Maybe I was close to 50%. So every other day, on average, I was sad. Terrible, terrible way to live your life. So I started writing down some things that could make me happy. So this was in July 1st. It was that day. And I started writing down second, third, because actually this one particular acquisition caused a lot of pain in other stocks that I was short. And it took me a while. And I had a terrible, terrible month in July. So every day I was writing down. But write down right now, write down some happy habits. So write down, for me, it's listening to uplifting songs, powerful songs, listening to the words. It's spending time with my kids. It's playing games. I love to play games. I like to go skiing. I like to play tennis. I like to play ping pong with my daughter, one of my daughters. And what else? Play with an animal. You know, spend time with, animals have unconditional love. No matter what you do, they're going to love you, lick your face. Those dogs lick your face no matter what. So come up with a list of things that you can go to when you're not feeling ecstatic. And that's what I did in July 2015. Now, here's the punchline. In August of 2015, the stock market was down 6.8%, almost 7%. It barely, that rarely happens. That'll happen once out of 3 years. Massive decline in the stock market. My fund was up 3%. And I say the main reason was because I was living these happy habits. In fact, I took 2 weeks off. I was spending time with my daughters. I was on vacation. Vacation's a great way to be happy, right? Spending time by the water. I was in August 2015, I went to Croatia with a buddy of mine. The other week I was with my daughters. We were having a great time, having fun. I wasn't watching every single tick of the stock market, even though it was going down massively, and we made a ton of money. And the next month, September, I had another great month. The market was down another 1.5%. We were up 1.5%. So over those 2 months, I outperformed by over 10%, which is unheard of. And I truly believe to this day it's because of these happy habits that I created, that I did, that I started doing then, that I continue to do. It could be visualizing your dreams and desires. It could be journaling. It could be jogging like I do every day. Write down some things that you can go to. So let me repeat my email for Cindy. It's Joel, Joel, at Salomon, SALAURMOR.com. So happy habits, write them down. And let me give you the final G. This may be the most important rule. It's 105 degrees. Are you kidding me? No, it hasn't gone down since you left. Did you give her the cold compresses? Did you give her the baby Tylenol? We did. Is there anything else we should do? No, we're going to come right home. This was the conversation I had with my mom in early November 2006. Morgan was not yet 9 months old. And I was on the Upper East Side with my wife at the time, celebrating her birthday. My parents were home watching my kids. We rushed home full of fear and worry and just really, really scared. And I tell people now, worry is negative future planning. You're thinking about what you don't want to happen. Why not think about what you do want to happen? But I didn't know this back then, 14 years ago. So we rushed home. Morgan's pale, not herself, clearly. We gave her more cold compresses. I literally gave her a cold bath and She showed me how strong she was, even not yet 9 months old. We called the pediatrician, and the pediatrician said, if the temperature doesn't go down, go to the hospital tomorrow, actually. Well, the temperature did go down, but on Monday morning, we went to the pediatrician, who took one look at Morgan and said, get to the hospital. See, she knew her history. So we rushed to Greenwich Hospital in Connecticut, and the surgeon takes one look at Morgan and says she needs surgery. We're like, is there anything we can do? And he's like, no, it's necessary. So I don't think anything could prepare us for Morgan getting, the IV put into her, all those wires. And then they told us we had to leave the room. We couldn't stay in the operating room. And I remember tears flowing down my face and my wife at the time. And I don't remember exactly how long it took for that operation to take place, but a few hours later, the surgeon came out, said everything worked out fine and Morgan would be out shortly. And then she came out and she still had the IV tube in her and very pale, and the crying ensued again. But a few hours later, the color had come back to her face and she was smiling again. And I look back on that time with gratitude. I am so grateful for Morgan having gone through that operation and come through with flying colors, her courage. And of course, I'm so grateful for her having such strength. And I'm grateful now for Morgan being alive, for being such a smart, caring, thoughtful, beautiful, courageous daughter that she is. So what can you be grateful for? Who could you be grateful for? This will change your life. I started a gratitude journal in 2012. I used to, before I go to sleep, write down all the things that didn't go right, or think about all the things that didn't go right in my day. Now I focus on what did go right, what I'm grateful for, what I appreciate about. And I will tell you that when you focus on gratitude and the things that you have in your life, there's more and more things that will come into your life for you to be grateful for. And that's why this is rule number 5 in the 9 money rules. It will change your life. Start a gratitude journal today.
Yeah.
Because when you're focused on gratitude, it's just, the appreciation just flows. What were you going to say, Dawn?
Yeah, I just want to share. I speak about the 4 steps to unstuck, and I believe one of the biggest roadblocks people have is pointing fingers or coming up with alibis, right, for why they're not moving forward. And that beautiful story about your daughter, many people look back to things that were roadblocks in their lives or experiences that were painful. And they relive them as opposed to looking at them as amazing opportunities to turn up their gratitude. So if in your situation, you look at some setback, right? Like your daughter's in the hospital, or, I went through this horrific divorce, whatever that is. And to be able to say, you know what, if it's in front of me, it's inside of me. So this experience was perfectly orchestrated for my development, for my transition to a higher level. So if it's in front of me, it's inside of me. So number 1, take responsibility instead of pointing fingers. Number 2, forgiving yourself for feeling bad, forgiving the other person for maybe whatever you think they did to you, or the circumstance itself, forgiving the circumstance. And then step number 3 that I take people to is, how can I see this differently? How can I see this differently? I had a client who shared, every time I went to work, I would walk in super annoyed because I sit on a bus and there are people who are talking, and my day would start with me, just being at this stress level. And we took it to a point where, we were able to see that the reason why that affected her, it was a trigger because she felt that nobody heard her.
Mm-hmm.
So then the action around that would be to be more forthcoming with her communications and not to hold back. So that beautiful lesson actually created this action plan for her. And then the fourth step, and I love the approach of Ho'oponopono, where we just seal a beautiful process. So I love you. I'm sorry. Please forgive me. Thank you. It's really taking what you just shared, which is every setback, every altercation, every challenge is an opportunity for us to recover a little bit more of our personal power. And one of the books that I have my clients read is called Busting Loose from the Money Game. Yeah. And it is kind of out there. With that said, it's very much in line with spirituality that many people align with, universal, the laws of attraction. Also, A Course in Miracles, which I study, which is about, I am all powerful. I came here to remember that. So every single day, I have an opportunity to leverage my transformation by seeing setbacks as learning experiences.
Absolutely. Yeah. I truly believe that. And also Busting Loose is one of the books. I read a ton of books for research in my book before I wrote my book. And that was one of the books I did research on. Great book. Yeah. So I did want to, we promised talking about 2008. So let me just end with 2008 and how I made money in 2008. So what I did first was rule number one. I had absolute faith. This was my dream, by the way. This was my dream job to manage money back then. And so I had absolute faith and absolute belief that I was going to make money. And so even though the market was down 40% and financial stocks were down 57%, and we were only managing financial stocks, we made money. And the point is, like, I was managing a hedge fund. So I was betting that some stocks were going to go up and other stocks were going to go down, but we had a limit as to how much we could bet were going to go down. So it was pretty balanced. So I did have a lot of stocks that I was betting was going to go up. And even so, we still made money. How do we do it? I truly believe beliefs was number one. Two, I had tons of intuition. Like, intuition was off the charts that year. And that was the year I actually realized I had intuition. I didn't realize how strong my intuition was until I started managing hundreds of millions of dollars and how, like, things would just come to me. So that was another reason. And the other is, you can bet that stocks are going to go down. And I teach my 5-step stock screen. Hopefully we have a few minutes here to go through it. But I teach my 5-step stock screen, but that's to bet that stocks are going to go up. One of my clients said, well, how do I bet that stocks are going to go down? You just do the opposite. So you can do the opposite of my 5-step stock screen that I'll now go to, and you can find stocks that are very likely to go down. So let me just quickly go through that. So it's for those who have my book already, and I know some of you do, it's page 152 and 153. I'm going to go through in my bestseller, The 9 Money Rules. So the first step is you want to calculate if a company's earnings grew at least 10%. So here in this example in the book, I use Amazon. Some of you may have heard of this company. I talk about Amazon in the book a little bit. It's back in 1999, there was a fictitious story. I talk about Amazon and how somebody told this financial advisor, told this person about this company that sold books online. But it had already gone up 10 times in 1999. So the guy wasn't interested. And of course, 30% return per annum for the next 20 years. 30% per annum. That outperformed the index by 100 times. 100 times. So you could have, even after the stock had gone up 10 times, you could have made money. Anyway, so let's talk about Amazon. So Amazon, I give the example, this goes back a year when I was writing the book. In the second quarter of 2018, Amazon earned $5.07. And in the second quarter of 2017, they only earned $1.25. So that growth rate is 306%. So 306 is greater than 10%. You're looking for earnings growth greater than 10%. So now you move to second step. If it passes, you keep on going. So the second step is, did their sales, their revenues grow at least 5%? So in this example, in the second quarter of 2018, Amazon had sales of $52.9 billion. And the year earlier, it was $38 billion. So that's a 39% increase. And that's greater than 5%. So you go to step 3. Step 3 is the number in step 1 greater than the number in step 2? So that's just, is 306% more than 39%? It is. So the reason we do this is to check if the profit margin is increasing. And here it's increasing a lot, because 306 is a lot more than 39. So then we move to step 4. And step 4 is, we're trying to figure out, is the stock cheap? So we calculate the price to earnings ratio compared to step 1, the earnings per share growth. So in this example, Amazon was trading at 1,808 at the close of business July 26, when it reported those earnings we just quoted. So the PE is 1,808 divided by 4 times the $5.07 I just talked about earlier. So that PE is 89. That's a very high PE, but it grew faster than 89, right? It grew 306%. So 306 is greater than 89. So we continue to step 5. Step 5 is a check. Some people don't use step 5, but I added it because I found that this is what I was doing when I was managing lots of money. I say, how did the stock do on the day of earnings? It's kind of, you get a ton of information on the day of earnings. And so analysts who are professionals are upgrading the stock, downgrading the stock. There's a lot of reports coming out. So if you wait to the end of the day, a lot of this information is already in the stock price. So what did the stock do on the day of earnings? If it went up, that probably means that all this information from all these different places was good. If it went down, it probably means that all this information from all these different places was not good. So what did Amazon do on July 26, 2018? It went down 3%. Now, the other thing you could do is say, okay, well, if the stock market went down 10%, then that actually outperformed. That's a good thing. So I then added this other step. How did the stock market do that day? Well, the stock market was down about 0.25%. So Amazon went down a ton that day. And it was mostly a reflection of the earnings that were not as good, even though they seemed very, very good, they were not as good as expected. Now, just to check, what did Amazon actually do from the day of earnings until the day of the writing of this book? So this was for the rest of this year. It was down the rest of last year, it was down 26%. The stock market was down 17. So on an absolute basis, it actually underperformed by 9%. Now, but this was what the point of this 5-step stock screen is, to see how a stock is going to do over the next 3 to 6 months. So I know I went through really, really fast on that, but
I'll just step in. What that process has done for me is I look for opportunities to invest in companies I believe in. And I also do, some research, and I look at up and coming companies. So there are opportunities that are swing trade opportunities where I'm looking to make some quick money in a short period of time, and I place my stop losses and I have my targets and I create a nice cash flow on a monthly basis doing that. But from time to time, those stocks that come through my screeners, when I pass them through your 5-step process and they pass on all levels, I can feel confident that I can place them in my long-term group and they can just sit there making money for me. And some of them are even opportunities for me to make even more money through a covered call strategy that I use on a monthly basis. So this process that you shared with me has given me confidence, and rather than just taking for granted what somebody's saying might happen, really understanding why it will happen. And if you are buying because of there's good news in the market, and you're selling because there's bad news in the market, you're making the mistakes that Wall Street wants you to make, because much of the news, which is not what Joel is talking about here. Joel's talking about looking at the financials, but much of the news is benefiting Wall Street. Wall Street can't make money unless you make a mistake. So Wall Street might, if they go long, they buy low and they sell high. Well, for them to buy low, somebody has to be selling low in fear. For them to sell high, somebody must be buying high in fear, but that fear is called the fear of missing out, right? So Joel has taken me from where I was as a retail-minded investor to a wholesale-minded investor, because that's the world he comes from. And I can confidently say that I feel super strong about outperforming the S&P 500 this year based on, you know, the work that I do with you. So why don't you tell everybody how they can set up a complimentary conversation with you?
Yeah, so you could go onto my website, that's Salomon, SALEURMOR.com. About halfway down, you just click on the link there and you can set up your free complimentary prosperity coaching session with me. Love to have you, love to help anybody who's on the call or listening to the recording.
S-A-L-U.
No, sorry, S-A-L-A.
S-A-L-A.
Sorry, so it's named after my daughters, Lauren and Morgan. So Lauren, L-A-U-R, Morgan, M-O-R. So I know it's confusing because my last name is close, but it's SALAURMOR.com.
Yes. And you'll have a delightful session, walk away with some amazing inspiration and direction. And I just want to thank everybody for being here with us, because you gave us this wonderful energy to be excited and rich in wisdom. So thank you, Joel, for being here with me. And we'll continue with all of this giving, because there's so many things that we can be talking about here that is going to allow you to sleep better at night and to live life to its fullest, because we're here to have fun and be
absolutely. Thanks everybody for the questions. Cindy, thanks for all those questions. Great questions. But you know, I'm here available, and I really, you know, really want to give you guys a step. If you're not financially free already today, let's get you the guys there as quick as possible.
Okay. Bye now.
Bye.